Hello, everyone. So, let's talk about something of great importance. How do I make money in the stock market? But how do I make money in the stock market smartly? And how do I make market in the current condition with this famous rotation trade happening? I will explain to you. But first, obviously, do subscribe to my channel. Do subscribe. Do give me the thumbs up, obviously, because I'm getting lots of subscribers. I'm growing very quickly, and that's because one thing that I do different is that I tell you what's going on, but I don't push trades one way or the other. I explain to you what's going on. I'm not saying don't do anything. I'm not saying, wait. No, because like everything in life, if you wait, that's a decision. If you do make a decision, that's another decision. But doing nothing is like doing something because it has an impact, right? So what you want to do is you want to understand, that's a key word, you want to understand what it is that you're getting involved into, right? So don't forget, subscribe and like my video. So what are we doing? Next week, we're going to have a Fed answer to a question. Will he or will he not, it's like a soap opera, lower rates? More likely than not, he will not. And again, my belief is that the market, the economy is doing okay, inflation is kind of down. So if you need a reason not to do anything and keep the thing going, you have it. Now, obviously, something needs to be said about the fact that the longer you wait, the more likely you're going to have a recession. That has happened in the past, and things that is grumbling that the economy is not doing so great right now. But when you look at the data, the GDP, look at my previous video, the GDP is okay. Inflation is under control if you look at the latest inflation number, not the CPI, but the PCE, which that's what they look at. Based on those two numbers, things are under control. So you could afford to wait. Now, obviously, the more you wait, the more likely you're going to have a potential recession. And, if the new guy comes in, maybe a Republican, and he inherits a recession, that's not too bad if you're on the Democratic side, right? So, I don't know. Maybe it's something, maybe it's nothing. We shall see. But right now, the guy is basically looking at the numbers, and it's probably not going to be a decrease in rates. But regardless, right? We're here to, well, how do I profit from this thing? So we've been talking about SPY recently, right? And SPY, let's see how our trade is doing. Right? If you look at our portfolio, which I put that trade not too long ago, our SPI trade is up 7.7%. How is the S&P doing? The S&P essentially, the S&P, the market, the S&P, let's see, the S&P was up 1.1%, right? When we closed yesterday. So, listen to me now and believe me later. The S&P went up 1%, and we went up 7%. I mean, I know, options are risky. Something to be said. Are you being paid for the risk? That's 7 times. Because at the end of the day, I like to focus obviously on the return, but I like to understand the risk that I'm taking. With this S&P, this SPY trade, which is this trade particularly, this is the one expiring in December 2024, and obviously at the expire with the strike price of 500. That's where the action is. Now, if we take a look at SPY and we look at some of the other options from we're looking at December, right? So if you look at December options, and this is where the analysis comes in. This is the call for December. Is it December trade? No, it's not. Sorry, this is very tricky here. If I look at the December trade, December 20th, my 500 strike price, right, is up 7%. Now, you will notice one thing. 7%. You know, if you pick the 495, you would have been at 1.5. You would have picked 505, you would have been at 100. So 500 looks like a sweet spot here. And that's because it's closest to it basically is the one that seems to be trading the best. So I'm up 7%. Now, what is 7%? That is 7% in one day. Okay? 7% in one day is there are basically 5 trading days, right? So 7 times 5, that's basically 35% a week. 35% a week, that's about 120% a month, right? 7% for one day. Let's say I do this every day, 777, although the compounding will make it even more, but keep it simple. 7, 7, 7, 7, 7 times 5 is 35%. 35%, 35% for the week times 4 for the month, that's 150% or so for 1 month. 150% times TEL, that's almost 1,500%. That's a 50% 100 annualized report. I mean, you're not going to do that every day, but you have to put it into perspective. That is excellent return. Could have in and out. Okay. Now, obviously, what is a risk in something like that? The first risk that you're taking is the fact that you have until December 24, then this thing expires. And the closer you got, the more volatile it gets. And the more less likely it is that you make any profit. But you have time to play around with it. The point is that I'm 7 times. That's a huge amount. That's something to think about. Now, what does it mean? Well, I mean, obviously the market is up a little bit, not a lot, because it was down before, and it's up because expectations are for this. And I told you before, they're expecting rates to come down. But once it comes down, you got to realize that maybe that the party might be over. So between now and then, I mean, I don't care. I mean, I don't want to take a bet. And maybe things are going to happen. Some things are not going to happen, right? Maybe I'm right. Maybe I'm wrong. But you know when I'm right and I'm wrong, what's happening to the market? It goes up and down, right? So if the market does this, and you're here, and let's say you're here waiting for the market, and the market does this, bam, you trade. Bam, you trade again. You know what I mean? You want that, because one thing you don't want is this. Because then you're there, you're wasting money, nothing happens. So you want that volatility. And obviously, the shorter the maturity of the option, right? If it's an option 2 years from now, you're all the way up there, you can't even see it, and this thing does this. But the closer you are to the expiry and the closer you are to the strike, then the closer you are to hit it. And you don't care, because you hit it, you trade, boom, and you unwind, you're done. Goes back down again, fine. Then you do it again, boom, boom, boom. And even if you're like here and you're wrong and the market does this, eventually, because you're kind of volatile, boom, all you need is just a little bit and you hit it. You have to follow it, you have to understand it. So what is this SPY? What is that? Well, essentially, it's actually very, very simple. The SPY is essentially it's the stock market, basically, right? The SPY is this. Let me show you. So it's basically a SPDR S&P ETF. It basically represents all of the stock in the S&P into this ETF trading fund. Now, you could also trade the fund, and this is what I say. When I say the market went up 1.1, no, actually the fund itself went up 1.1%. You went up 7% because you're grossly leveraged. So what's in this S&P 500? What is in this ETF drop? What is the S&P 500? And what is the S&P 500? As you could see, it's Microsoft, Nvidia, Apple, Amazon. So basically 6, 13, 20, 23, 25, 27. So 27% of the assets are those, what we call the Magnificent Seven, right? That's good. These are good companies. Of course, it also means that in terms of volatility and in terms of risk, you're kind of concentrated with Microsoft, Nvidia, Apple, the tech firms. I don't know. That feels a bit heavy, but I mean, at the end of the day, it's the market. Okay, right. So what's going to happen to this market? What is this rotation trade we've been talking about? Well, basically, a rotation trade refers to a strategy where investors shift their investment from one sector of asset class to a different one, typically in response to changing economic conditions, to market trends, to valuation. And right now, what's happening is we're having more like we have a growth to a value rotation. A growth because we were all going after the Nvidia and the Tesla, right? The Tesla P ratio is almost 60. We're expecting a huge amount of growth from Nvidia, huge amount of growth from Tesla. But now, with rates coming down, and very important, and the fact that this rates coming down may be associated with a lower and a decrease in the economic activity, then what you want to make sure is whatever you own has value. And what is value? That means intrinsic value, the actual value of the stock that you're not overpaying for. Something, for example, that has consistency. Might be a bit boring, and we'll do a video on that, but at the end of the day, you're looking for that. You want to lower the volatility. You want to lower the uncertainty. And that's what's happening when we're dealing with this value versus growth. And does it mean you're going to be rewarded? Well, obviously, now you're not growing as much. The market might not do as well. Now, of course, you're going to say, but in 2008, we had lower rates, and the stock market went up because people don't have anywhere to put their money. Yes, but that's not at the offset. At the offset, at the beginning of the situation, you probably have some growth, but not as much growth as later on when we've done the cycle, right? And we've done great, and rates have been low for a while, and the economy starts to recover. That's when you see, with rates still being at zero, then there's places to put your money. Because when there's no place to put your money, then what do? You can't be at zero interest. So eventually things are going to recover, things are going to go back up, but you have to be careful. You have to make sure that you know what it is that you're buying. So looking at these options, quite frankly, we're not doing too bad indeed. Look, I mean, we're doing 7%. Now, obviously, the closer you're going to get to maturity, so instead of saying December, I'm saying, you want to be daring. Let's say October 31st. Right? The strike price of 500. That one did not trade at all. So that's the that's the call, right? Let me see. Yeah, call price. The call at 519 is down. Oh wait, hold on. We're looking at after hours. After hours, this thing is down as well. So this after the aftermarket, because it does trade aftermarket as well. So you got to be careful. The point is some volatility. I mean that's kind of what I want I want to talk to you about. Now, in terms of what else do we have? We have, let's take a look at our portfolio. And let's see what else we could do. Well, what you can do is, I mentioned this name before, but let's take a look at this company that I like a lot, right? The one that is doing fantastic for the past 2 years, which is BMI. It's up 154%. Now that's a pure stock. This is not an option. This is pure stock. 150% over the past 2 years. P ratio is 53. Be careful. But this is a smaller company. This is the kind of value stock we're talking about. It's a value stock because it is not as volatile and it has quote unquote value. I will show you why. So essentially, if I look at the company, let's understand what the company does. Profile. Badge meter. Let's take a look at that. I mean, you want to probably stay away from all tech right now. So this is not a tech. This is badge meter. This is plain old water. Very, very, very boring. Discover your edge with Blue Edge. Custom selection delivering the future of water management. Wow, that's, first of all, they have 119 years of technology innovation. With over 119 years, we offer end-to-end solution of flow management, water quality monitoring. We share our expertise with customers. There's lots of innovation going on. Okay. Sustainable report. Now this is a ESG trade, and that's what I mean by we're getting away from the tech. We're getting closer to something more ESG, more growth oriented. Not that the tech are not growth oriented, but the market by definition will start to say, okay, enough with the techs, enough with Nvidia, because eventually you're going to disappoint us. You're not going to grow as much. So let's see what you could do. Keep your pipeline network in sight. Latest news. Smart water evolution introduced Blue Edge. Introducing. They're doing there's a lot of innovation going on. And there's a need for innovation. Okay? They're doing a lot of interesting stuff. Don't forget, it's also commercial and industrial solution. And they have utility water solutions. So they're working, what do? Well, compound, different pressure. Look at all the products that they have for water product line. I know it looks a bit boring. It looks very boring because it's water. Who cares? Well, no, you need to care. You need to care because you need to understand what the company does. Market solutions. What do they do? Environmental monitoring. And I know it feels a bit heavy because I don't know about this company. Well, but you need to know what you're buying. You need to understand what it is that the company does before you invest in it. You need to start forming your own opinion. I believe that the market right now is very, very, very targeted to very opinionated, right? They only want to know one thing. Tell me what I want to hear, basically. And I like to hear what I want to hear. Well, Socrates said basically, you need to know that you don't know anything. You need to ask questions. You need to make sure that you understand what's really going on as an investor. We ask often Warren Buffett, right? The guy, now he did pretty well for himself, he's a billionaire, quite old right now, unfortunately, so may not be able to enjoy all his money. But the point is that you want to be able to manage in a way that you understand what you're getting. And this is kind of this channel is about. This channel says, look, this is what you could look at. And this is what you could do. You could do stocks. You could do options. You need to understand the risk. Because right now the situation is very uncertain. So if you have a lot of uncertainty, maybe options are good because you get hit. You could play on both sides. While stocks, if there's a lot of uncertainty, it goes one way, then you wait up there and it's never going to happen. So there's a lot of uncertainty. There's a lot of situation, but you need to know, you need to start taking the time, and this is what this channel is going to do. This, we're going to introduce you a name, and we're going to talk about the name again until you get comfortable with the name, until you understand it. And once you understand it, you'll know how it trades. Because one thing that is important to realize is that in this market, you have the price risk, which is the risk of the asset moving, and you have the credit risk. Is the company making any money? Right? So is one leading to the other? Is one? I will tell you that the most successful investor in history was a mathematician. So keep that in mind, right? And again, right now, I mean, where do you get your news from, right? Where do you get your news from? You're getting your news from, the paper. Maybe the Wall Street Journal tends to be even-ended, although they tend to be moved to the right. The New York Times is to the left, right? Fox is here, CNN is there. You don't know who the president is going to be. You don't know what they're going to be doing. You don't know anything. So you tend to want to. So, and on top of that, if you go for the social platforms, you have to realize that the algorithm kind of decide and want to show you what they want to show you, what they think is important. So you say, oh, this thing's got lots of views, so it must be interesting. Well, no, he keeps pushing the views on this for whatever reason. Sometimes if you say things that they don't like, they pull you out. So your mind is kind of being told what to do. And that's very dangerous, because you need to make up your own mind. I mean, Socrates, for example, he was, very famous in his time. He was a pauper, really walking around half naked with no clothes, basically telling people, why is this happening? Why are you drinking this water? Why are you picking these clothes? Why? And he was asking so many questions that he annoyed so many people that they basically put him to death. Socrates, the greatest, the original philosopher. And he knew one thing that he said, and my friend Taleb Nassim also said the same thing. You know that you don't know anything. You have to realize that you don't know anything. So therefore you need to educate yourself. Right? But not just what you want to hear. I want to hear about NVIDIA. Enough of NVIDIA, because it's been bought and sold 100, and it's been pushed. Is there any gas left in this thing? Right? Oh, but let's wait until it goes down. Well, then you're going to wait a long time. And of course, unfortunately, with the market, you say, well, I don't have to do all the things that you asked me to do. I could just buy the S&P 500. Yes, sure. Why not? But you're missing out on 7% daily. Well, obviously the risk on the S&P is more. But are you getting paid for the risk? I will give you an example when I said, are you getting paid for the risk? Right? Everybody wants to buy properties. And I bought properties and I sold properties and rentals and all that good stuff. But, do you actually know the price risk for a rental property? Well, yeah, I mean, I know how much money I'm making. No. That's the return. What is the price risk? What is the risk, right, that's tied to this asset class? Nobody has your property on a spreadsheet saying this is the amount of money that we made on this property. You might have a spreadsheet because you own the thing for 2 years, but you don't have 50 years worth of rentals, 50 years worth of expenses. Like you have 50 years worth of, maybe not 50, but 10 years or something worth of price for an NVIDIA. So you could see the volatility. You could see what's happening. With a rental, you don't know. You're just buying, you're just looking, and you're just saying, well, what is the risk of this rental really? You don't know. You say, well, I want to make, so how do you mitigate? Well, you make sure that you got the right tenants and you know exactly how much money they're making, blah, blah, blah. But you don't have a history. So that's something you need to watch out for. That is something that you need to be concerned. Going forward, I'm going to talk to you about crypto, which I think is important. We should talk about gold. And then we're going to keep tracking what's going on with our assets. Talk to you later.